Okay, hello everybody. This is Hubert here from TSG. Can I get a confirmation from somebody that you can hear me and see my screen? Just waiting for some answers to come in before I get going. If you can type them in the chat box, that would be great. Okay, great. Yes to both, 100%. Yes, great. That's good to hear. Okay. So then let's get going. So welcome once again. My name is Hubert Miranda, and I got together with the guys from Trading Strategy Guides to provide you some forex education. And today I'll be teaching you a strategy called the 5-candle mastery, or 5-candle master strategy. And basically I'll be showing you through the steps how to do it manually on your charts, step by step, but also I will show you a really nice indicator that pretty much just costs you virtually no money at the end, that will help you speed up the process, but it's up to you. You can choose whichever way you want to do it. So I guess I'll introduce myself a bit more, just briefly. Basically, I was working in the sort of retail and wholesale industry. My parents were wholesale traders, and I had a retail shop later on, and I transitioned out of that in the last few years into trading, and that's what I basically do for my full time. And I just recently got together with the guys from Trading Strategy Guides because I remembered, obviously, when I started out, how important it was really to find the right information, and that's why I'm happy here to provide and share what I've worked out, or what's worked for me in the past or over the years, and to get you a good head start, because it's so easy to start off in forex on the wrong foot, and then it takes maybe longer than necessary to get profitable and to avoid certain mistakes and so on. So that's from my side, introducing myself. Can I get a bit of a feedback on how what experience people have here in this webinar? Can you just maybe tell me completely new, or some experience, or advanced, something like that? Maybe those 3 options that would help me to gauge sort of how to convey the knowledge. I'm just waiting for some replies to come in again before I continue. Okay, newbie, moderate experience, but mixed results. Intermediate, new. Okay, so it sounds like there's a mixture of new and some people with experience, which I guess I should be expecting. So basically, I will just not assume any prior knowledge, and I will try, if there's any sort of simple steps that I have to explain, I will keep them brief, but I will go through any, if there's a concept that you don't understand, please let me know, and I'm really happy to explain to you. Sometimes I won't know if a concept is already understood or so just let me tell me, and I'll check the chat and address your questions as I go along. Okay, so basically what I'm going to teach you today is this strategy called the 5-candle master strategy, and is basically, you could call it perhaps, it falls sort of into the scalping side of strategies. So I think it lends itself well to sort of quick in and outs, because basically you're dealing with you're gonna, it's a momentum continuation strategy. So what that means is, if you have a look at this chart that you're seeing on the screen, and actually I will switch you over quickly like so. Okay, so if you just have a look at this chart that you're seeing, when I say momentum continuation strategy, all that means is that price is moving in one direction here, for example, and what that strategy is trying to do is essentially waiting or hoping for a resuming of that one direction momentum. So we had say, for example, a strong movement here, and then essentially a continuation, momentum continuation would be to say, this is the momentum, strong in one direction, and we're going to continue. So it's not a strategy where we're trying to catch necessarily always a big move, but we're trying to capitalize on the investors' momentum that's been established. So it's a kind of, in a way, it's a certain pullback strategy. We're waiting for a bit of a retracement and then going in the same direction. So I'm just telling you more or less what it is, so that you get a sense of location. 1 second, please. Okay. And so yeah, I don't think it's a strategy that is based for that kind of longer term trading or medium term trading. I think the positions you're going to open will be opened and closed relatively quickly, just simply because we're coming in more sort of at the tail end of a movement sometimes. And if things go well, yes, the movement goes longer, but I think it's best to kind of see it more as a short-term strategy. So that, yeah, I'll go into those details later on. So I'm basically talking about, it uses 2 indicators as its key foundation, and one of them is the fractal indicator, which are these black arrows that you see at the bottom and the top of certain candles, and the other one is the Bill Williams Alligator Indicator, which are these 3 lines, the green, red, and blue lines. And I'll basically give you a bit of an overview of those indicators themselves, and then we'll go into how we use them. But basically, these fractals, you can find those in your menu here, in the indicator menu in MT4. I'm sorry if you have a different platform, because I only got MT4, so I can show you how it works on MT4. So basically, you click on the symbol here for your indicators, and under Bill Williams, you'll find all the indicators you will need for the strategy. You see one here called Fractals. And if you click on that, you get a little options window that pops up, and it just gives you an option to basically choose the color you want for your fractals. I chose black, and you just click OK. I won't, because I've already got mine on, but you just click OK, and then you should have them on the screen. So the question is, what are those fractals? Why do they appear in certain candles? Well, basically, what the fractals do, they highlight swing highs and lows. And basically, they form automatically on the chart whenever a candle forms, like here, that has not got any higher candle beside it, for the next two candles beside it. So 2 candles after and 2 candles before, there isn't a higher candle than this one, and hence it forms a fractal. So it's in a way it's in a way easier to see all the potential subswings and bigger swings, and that's what we'll be using in the strategy. And I found them really helpful, not just in this strategy, but in general. When you look at any time frame or chart, like say I'm switching now to the daily chart, for example, of the pound dollar. It gives you sort of instantly a visual sense of high and low points that you don't really get without it. So if I just remove them quickly, so when you have just your chart like this, it's obviously you can see the swing highs and lows, but I find that they are really helpful for many trading styles. And what that obviously signifies when you get a candle, I'll just put it back on quickly. Here we are. Bill Williams fractals. So what that signifies, why that would be marked, is when a candle forms that is a high or a low, it suggests that there is some kind of importance to that, more importance to that level than other levels. Like while the price is moving up, it's just essentially pushing through different price levels. But here, something made it stop. So some oh okay, sorry. I'm just making a note here for my colleague at Trading Strategy Guides. I seem to have gotten to a maximum of the recording. So I'll just try and press record again. Sorry guys, this is just a little glitch here. I'll be continuing 1 second, please. Okay, great. I think I'm back. Recording again. Good. Okay. Okay, so we are. So yeah, so basically, this is more or less what fractals are, and basically they were developed by this guy called Bill Williams. And so what they're really good for is to, in a way, spot support and resistance levels quickly. If you are like on a time frame on a daily chart, for example, and you get a fractal, quite a significant fractal high here, for example, you can probably suspect that something is going on here, so if I draw a line here and then zoom out, you will tend to, and I'll go to the weekly chart even to see it better perhaps, you start to see that where that fractal formed, that is actually quite a significant price level in the past. So for a start here, price hung itself up a bit, but then earlier on here, and I'm talking about a weekly chart, so these levels here bounced twice is really important. So that's what you'll find, is basically they're good for mapping out support and resistance levels, and that will be a really important aspect of the strategy, is to in order to maximize its efficiency, you've got to be mindful of horizontal support and resistance lines, so that you don't enter setups where there is essentially a brick wall in the way. So that's, we've got the fractals done. Any questions so far? I see somebody said, for me, price changing ratio is too low. I'm not quite sure what you mean by that. So if you want me to comment on that further, then maybe just try and explain what you meant a bit more. I think that's the only question so far. Okay, so let's continue. So I'll go back in here. Right. So the other indicator is, you can also find under Bill Williams, and it's called the Alligator Indicator. And what you'll get when you select that is, again, another options window, and it will basically, once you click OK, create these three lines, which are moving averages. So moving averages are simply a line that takes into consideration a certain number of candles from the past, and plots where essentially their average value is. Okay, 1 second, I'm just reading a few more comments here. How can we operate in a lateral market, in a ranging market? Okay, I can address that a bit later. I'll save that question for later. And Bernd, can you adjust so MBR of bars, number of bars, is greater between fractals? No. Well, maybe actually. I'm not sure. Let me quickly check that. But I don't think you would want to do that, really. No, you can't change that. I don't think you would want to do that anyway, because this is how, in a way, other traders who use fractals, you don't want to be kind of running on a different groove than them, because then you might be seeing different things. In a way, when it comes to trading, it's better to stick with the crowd, because the crowd is more strong than the individual. So if you do things too individual, it actually can go against you. So back to the Bill Williams indicator. So like I said, moving averages are simply lines that plot the average value and of where candles have gone. So in this case, we've got three different ones, and they are on different levels because they take different averages as their medium. So the lips, what they call the alligator lips, it would be the green one, and that's based simply on the last 5 candles, the average of price on the last 5 candles. And then the medium one, the red one, is based on 8 candles, and the blue one, which is called the jaws, is based on 13. And basically you can create an indicator based on any on any amount of candles, but for this strategy we just use these 3 short-term averages. They have different purposes, So when you choose to put on a long-term moving average, which I can quickly do just to give you an idea of it. So under trend, moving averages. So, and I can put in like what I use myself in my own personal trading a lot is the 144. You get that white line, and you see it's much smoother because it takes 144 candles and plots the price there. And basically, really the main difference is that the bigger number the moving average is, obviously the more average the value is, and therefore when price comes to it's a more significant point than when it's just shorter moving averages that will be probably crossed back and forth more often. But for example, for trend assessing, it's really useful to have a big one. You don't really need it in this strategy, but I'm just telling you in general how moving averages work. So I'll delete that indicator again. Right, so any questions so far about the indicators, what I've talked so far? Because otherwise I'll continue on with the strategy itself. Just waiting to see if anybody comments with any questions. Okay, that doesn't seem to be like anybody's got questions. All right. So I will give you the rules to get going, and then I'll talk a bit more about some more specific details of how to fine tune it. So basically what we're waiting for is we're waiting for a fractal to form. And so basically when you get to a high fractal on above the candles, it means obviously that you've come to some kind of end of an upswing. So in this example, I'll give you an uptrend example where we would want to buy and a selling example. But in this case, so say if you say, okay, we want to buy because the trend is generally up, and here we see that the swing it might be coming to an end. This fractal won't be here when that candle closes, but it will start to form after those next candles close. But basically, you see, okay, price reached a high, and now it's started to go down. What we are now essentially trying to do is gauge a moment to say, okay, when might be a good time to jump on board with a buy trade, so that the movement is going to continue in the upwards direction. And so in a buy situation, you want to look at the fractals at the top. Say for example, let's talk about the current moment, because that might be the best, even though there won't be most likely a valid setup in this situation, but you might get the gist better that way. So here we're obviously in an uptrend. Now a fractal has formed, and now the next step, once you've got that established, is essentially to wait for 5 candles to form after that. And what you ideally want to have happen is you don't want them to touch this red, which is the alligator teeth, the red moving average. And in an ideal situation, you just want a sort of flat movement, a bit of up and down, because that will give you an indication that there isn't a lot of strong downward pressure, not a lot of bearish pressure, and therefore it's the first signal that uptrend continuation is probably more on the cards. Yes, we will upload it to watch later. That will be happening. Okay, so and basically, so that's what you're looking for. One key rule is you wait for a fractal to form, then watch the candles to form. In an ideal sense, you want it to be more or less gently flat, like do a bit of a corrective pattern. Like here, for example, this is a good example of how price looks when it's so-called just in a correction rather than impulsively in a reversal or so. Like here you get lots of energy in the move down. There was a move up and then boom. That's not what we want to see. We want to see like ups and downs like this, because it means that basically buyers and sellers are just taking turns. People are probably taking profits after this move. That's, I mean, just telling you to giving you understanding of how you can actually read what the market is doing with the candles. So there was an up move, then people are starting to take profits, and hence you get a downward movement. But as soon as that happens, some new buyers are coming in and they're starting to push the price up. So for a while, that back and forth happens until, in a way, enough people have closed their positions, and clearly there's still enough buyers on the market, and price starts shooting up again. And that's really what we're wanting to see ideally, is this sort of sideways corrective movement, not a sharp movement. Here, you can already see that for a start, the fractal candle itself is a bit iffy for uptrend continuation, because you have a really long wick and it closed bearishly. So if say, for example, this candle would have been a green candle and with not much wick at the top, then it's a very different situation. Here, you could see price try to push up and then got pushed all the way down. So whenever you see like a big wick, it means that clearly that movement has been retraced a lot. And I'm looking here at a 4-hour chart time frame. So that candle is quite significant. 4-hour candles, they have quite a few traders behind it, because there's enough time for people to place orders. And so they are a lot significant. If you see that on a 1-minute chart or a 5-minute chart, it will have less significance. But this is definitely a warning sign that, okay, there's a lot of selling pressure suddenly here. But nevertheless, as an example, there is a fractal and price is not showing sideways movement, it's also going down. So you get already 2 warning signals in a way. But in order for a signal to be valid, they basically should not touch this red line and certainly not cross it. I mean, it may be some room for them to very briefly touch it, but only if it's a gentle movement. So for example, here we had the fractal high, and then 1, 2, 3, 4, 5 candles, and they were all still fairly benign. So that would be your next step. It's not a buy sign yet, but that's your first step. So once you've got your 5 candles that haven't touched that, and the other factor that you've got to see is that during this time, that none of the lines have crossed each other. So you don't want, say for example, the green one to drop below the red one, or something like that. You just want them to stay in that same order. So once that's happened, you're then waiting for essentially a break of the original level, of the original fractal level. So in this case, that's here. So essentially you would have had to wait for a break of that level, and you would then buy. And essentially we're hoping for an uptrend continuation. Obviously in this case it tried to, but it didn't go very far. and I'll give you a few tips as to how you can gauge which setups might be better than others. But essentially those are the rules. And what I might do is I'll just quickly switch you back over to that. I'll just go and open up a sheet of paper and then show you that. Okay, so just to review, basically step 1, waiting for fractal to form. Top fractal in an uptrend and down fractal in a downtrend. Is that, guys, is that helpful if I just show you, if I write these notes and show you, so that you don't have to remember everything and you've got a visual of what I've talked about? Or do you want me just to continue? Can I get some feedback there perhaps? In the meantime, I'll just continue writing here until I get some responses. So then wait for 5 candles to form after fractal. Ideally choppy sideways movement. Not a lot of momentum in the opposite direction. Okay, cool. Write it down. Good. Three. So we've got the fractal formed, 5 candles formed. Now rules are price must not touch the red indicator, the red moving average. I just call that MA, moving average. The red MA, alligator teeth. And MAs should not be crossing over each other, but stay in the same clear order. Now in that regard, if I just quickly show you on the chart back here, the reason why they align themselves in an order is because they're based on different candle averages. So basically, because this one is based only on 5 candles, it will be more responsive and therefore go up higher faster than the one that's based on 8. And the one that's based on 13 is slower yet. So hence you get them aligned in one order. And basically what that just tells you is that it's a sort of way of gauging trend. You know, as they come closer together, it means that the trend is consolidating, like here, is sort of pausing and making up its mind. And then as they stretch out again into this order, it means that obviously trend is flowing again. So back to my notes. So we've got that, and then number 4, step to wait for the break of the signal fractal candle. And that's as far as we've gotten so far. So then the next step essentially would be to place an order. Enter position at the break of the signal candle. Okay, so I'll continue with those notes later on. Let's go back to the chart. So say in this situation, let's take this example, because obviously here we haven't formed enough candles yet, so we can't talk about it. Here we have a fractal. We have 1, 2, 3, 4, 5 candles. They've behaved well. Price did not touch the red line, so that was okay. So essentially now you're saying, okay, now I'm in waiting mode to wait when this level is going to get broken to the upside. Here, it got broken here. Now, we're looking at a 4-hour chart. You can use that on any time frame, but you've got to bear in mind what's happening on the higher time frames, like for example the 4-hour chart, because support and resistances at that level will affect whatever you do on the smaller time frames. So if you want to trade this on a 15-minute chart, that's fine, but do make sure that you zoom out and check those levels, and I'll show you how to do that shortly. So here what happens is we've got a strong break of this level, and there's two approaches basically that you can use for trading breakouts. One is to wait actually for the candle to close. So in this case, obviously this candle takes 4 hours before it fully closes, because sometimes what can happen is the price goes up while a candle is still forming, but then actually at the end, by the time it closes below the level again, and then you basically haven't had a breakout, you just basically had a bounce off that level again. In this situation, we're very high up, so if you were to enter a buy position here, that may not be so good, because like so here actually we're at another resistance. So in some respects it would be good to then wait for a pullback to some level, and you might not be able to gauge it perfectly because obviously you don't know how far it's going to pull back again. In this case, it pulled back to here, which would of course be a really good entry because we had a really nice solid break here. But even if you just wait a little bit and say, okay, you might enter somewhere here, that's already better than here. So this breaking candle is really important. And so yeah, one approach is to wait for the candle close. The other approach, which is more aggressive, is to simply say you can place like a pending order. You could like a buy stop order just a bit above the fractal top that you're analyzing. So you could say I'm putting it maybe, I don't know, 5 pips or so above it, and basically what that will do is we will trigger automatically a buy position as soon as that level gets crossed. But of course, I suppose the danger in that is that you don't know if this is really going to be a breakout or not. So that is something in a way that one's got to assess is how risky does one want to trade. It depends on the situations, and I'll give you a bit more detail about that very shortly. Just a question has come in. If another fractal appears within the 5 candles, do you use the new fractal? No, basically you ignore the fractals that come after the one that you're choosing. In a way, it's quite good if these like this was a really good example because you're getting fractals up and down quite close, which again gives you a confirmation that price is in this consolidation rather than really turning down strongly or anything like that. And then another question is, do I always use the 4-hour time frame? No, I don't always use the 4-hour time frame, but the 4-hour time frame is sort of my key gauge because it's a nice time frame in the middle. So, and you tend to get a good sense of the market structure, of the trend strength, what's happening in the bigger picture on that time frame. But we could, for example, say you're using this as a level to gauge your levels, but you can then also decide to enter on a smaller time frame. So let's look at this example here. For example, if I just do this and say, pretend that we are just here, and I'm saying, okay, I'm starting to be interested in this setup, and I'm just gonna make a line here so that we don't lose that spot again, making that dark. Okay. So I'm saying, okay, I'm interested in a potential buy setup. The first thing that I want to check is what sort of support and resistance is in the way. And you just zoom out and you can have a look and say, okay, where are the next resistances? Here is an obvious one. And that's relevant to us because that probably would be the next strongest resistance in the way of a buy trade here. So map those out. Then you can check, okay, we had a bounce here, but the question is this got anything to do with other points as well? Well, sort of. You get a bit. What's important about horizontal level drawing is that you check it in a way from both sides. So here we have a point where price bounced from the bottom, but actually at this point we have price bounce from the upside, and that is just as significant. So just because the level gets broken like this here doesn't mean that it's irrelevant. What counts is how many, in a way, precise closes you have at exactly that level. So in this case, price shot through here. I'll just zoom in so you can see that better. You can see the wick pushed through that, but the candle closed at that level. And then here again, it tried to push through, but actually closed above it. So the level basically where the candle body closes and the level where the wick is, they are both important points. And you can see that where this candle closed is in line pretty much with the wick of this one. So it's not a super perfect level. It's not as neat as this level here, because you have these two very precise bounces, but it's something to contend with. So I've done that. I've got some levels marked out. And if I now go back to the setup here, I say, okay, I should be warned of these levels. So now price begins to break out and say this candle is pushing up. You're already getting a good sign that you get one big candle like this here. Just moving in even closer so you can see that better. Okay, so price is doing this. So this is already a positive sign that you had these smaller candles and then you get one big green candle again, which means the momentum is in your favor. And now it comes to that level. What you can do then is go to a lower time frame. You could go to maybe the 15-minute chart, which I shall do. And then now I just have to quickly find that spot again. Where are we? here we are. So we are looking at this move. This is basically, sorry, sometimes it's hard to keep a track on where you are when you change time frames. Here we are. Okay, so this is where our initial fractal signal came in. This is the correction, and then here we're looking at the break. Right. So the 4-hour candle obviously looks like one big candle. The 15-minute candles, you can see that move is made up of many different candles. Here you get the break of the level. So you could say, okay, I'm not going to wait for the 4-hour candle to close, but I'm going to trust in this lower movement already. And in this case, you get this first swing. So and then just wait for a pullback and try and enter somewhere at a better level than just right at the top. And so this is one way that you can choose to enter, is you can look at a bigger time frame, which I think makes more sense because you get a bit more safety in that situation where you're looking at a bigger picture first, and then for your entries you zoom into a smaller time frame. I think that makes a lot of sense, and I think you will get better results that way. So that's basically it for an entry. There's another question that's come in. How do you identify a sell trend using the fractals? Yes, I'll show you that in a second. So if I go back to my notes quickly and say enter sell position at the break of the signal candle. So what I'll say here, I'll make a I might make a point here saying 3.1 check horizontal support and resistance levels on the 4-hour chart or even daily chart, and you can just map those, put those levels in, and just keep them on your chart because they will be probably relevant for a long period of time. So you do that as a step, 3.1, wait for the break of the candle, enter position at the break signal. So then you get, as we discussed, two options here. Option 1, wait for candle close to confirm break. And option 2, wait for break of level on smaller time frame and then enter at a pullback afterwards. Everything clear so far? Yeah, okay, TP. So the next step would be targets and stop loss settings. Let's go back to the chart. Okay. A question here, what do you mean by price breakouts? So basically, I'm talking about price breaking above a certain price level. So price obviously is horizontal. This is the price axis. So, and this is our time axis. So basically you can see that price here is going up to a certain price level and pushes back down, tries again, pushes back down, tries again, pushes back down. And then suddenly here you get a break of that horizontal line. That's what I'm talking about. Because price then can close really high, much higher above this level, this is what's called a break. And this is what then is an indication the price wants to go higher. I hope that's clarified that. So that's what I mean by breakout. And essentially the counterpart to a breakout is a bounce. And a bounce is when price, instead of breaking, bounces. So that's what I'm, in a way here, made a small bounce. Here, that's a bounce. Price went to that level. Oops. Price went to that level and bounced down. Okay. Just let me know if that's clarified your question. In the meantime, I'll move on to some other things. So how do you then set your targets and where do you set your stop losses? Well, again, you go back to your horizontal support and resistance levels. So in this situation, sorry guys, don't want to jump around like this. We've mapped out our levels already. So in a way, and that's why I said it's a good short-term strategy, because in a way we're coming in more towards the end of a move rather than the beginning of a move, which gauging the beginnings of an upwards move or like a trend move is more difficult and requires a lot more in-depth analysis and experience to gauge that. So that's why we're waiting for essentially just a continuation of once we have a confirmation. And because of that, we can't always expect for price to just go on forever in our direction. And so that's why I think the strategy works best if you, in a way, take profits quickly, or at least bring your trade to break even quickly. So in this situation, I would, for example, say, well, this is already, this first next level above is already quite a good target. And of course, in this situation, if you would have waited for the candle close, well, you're already at the target. That wasn't any good. So you would have had to definitely wait for a pullback and then made that your take profit level. Or you can say, okay, I think most brokers do allow that. In my case, I do. What's quite a nice way of doing it is you can say, right, price reaches your first resistance, which could be your target. And you say, okay, at that point, I'm going to move my stop loss to break even. And I'm going to maybe say close half my position. So you keep your position open, but you just take out a certain percentage, like 50%. So that means that you've got some profit secured, but you're leaving the option open for it to go further up as well. And that, I think, is quite a nice way. And for what I call scalping, so scalping is a more short-term way of trading. You're just going, okay, I'm not expecting a huge move. I'm just taking some small profits, but you're keeping your risk low because you're quickly moving to break even, and you're not in it for too long. So that's, I think, where this strategy fits into the scheme of all the strategies that exist. So that would be one approach. I think I would probably recommend that. And then you can say, okay, for your next target, you go simply to the next support and resistance level that you've mapped out, which would be here. So you might take 50% of your position here, and then at the next target, you would have taken the next one. Now, in addition, you also want to say, in addition to the horizontal resistance line, you might want to draw some trend lines as well. So in this case, I can draw, for example, a trend line here. Make that golden perhaps. And again, because this is a 4-hour chart, this trend line is quite significant. So you just draw trend lines by connecting several tops. You need at least two points to make a valid trend line. Here we have 4 touches, which is a really strong confirmation. So this is, for example, another, and the reason why it's relevant to draw these is because they act obviously as resistance and support just as much as horizontal levels. But the horizontal ones are kind of your basis, your key. They're even more important than trend lines, I think. But they give you extra information. And in this situation, it's actually really nice to see how this candle broke that trend line, where price bounced 4 times. It broke, and then it consolidated like this above that trend line for the first time. You see how before this, price could not at all establish itself on the other side. Here, it did manage to establish itself on the other side, and it did not break below it. So this is actually a very good example, a very good indicator that the price will most likely continue higher, because you have this nice break, consolidation, and then it just uses in a way the trend line as a springboard, right? Just to catapult itself up. So yeah, I thought I'll just mention that as well. Okay, so let's go back to our notes quickly. Step 6. Targets should be set at the next major support stroke resistance level. And option to close part of the position at the first resistance level and leave other part open. No, I'll put that in the next line, and leave rest open to run towards the next support stroke SR level, I call it, support or resistance level. Hope that's clear. Now, final step is stop loss settings. If we go back here. Right, so in this situation, all of this has formed. We get our break. And again, because we're looking here at a 4-hour chart, this is really good. This is a really good support now, because you can see how price has bounced many times here. It's used that. Let me get rid of some of these lines, sorry, just to confuse you. Not so much. We've talked about all of these lines already. So now we're talking about this line here. This has been a good support and resistance in the past. Bounced here, bounced here. So in this trade, that would be a good stop loss setting. And probably below these fractals is good. That's what fractals are actually extremely good for. I find this is almost the best use is for in a way, finding quickly good levels to set your stop loss and targets. So when you set your stop loss below some recent fractals, that's often a good level, especially when you get like several fractals on the same level. So let's write that down. Stop loss setting. should be just beyond the fractals. How do I say that? Just beyond the support stroke resistance fractals. You know, essentially, I'm trying to write it down so that it's valid for both uptrend and downtrend continuations. So stop loss setting should be set just beyond the support resistance fractals that form near the trade area. Any questions? Let me know. Okay, so I think this is looking pretty good. So let's just quickly do a what I'll do, I'll show you a downtrend example as well. But what I'll do is I'll combine it with that indicator that I wanted to show you. So I'll now change profile. So basically, Trading Strategy Guides developed an indicator that incorporates all those steps that we've talked about in this strategy and highlights the potential trade options for you already. They're not. That doesn't mean that every signal that this indicator highlights should be tradable, but it takes out the headache in a way. It shows you when the rules start to get fulfilled, and then you still have to make your own analysis, but it makes it really, really quick and easy to gauge these situations. So for example here, I've basically put the indicator already on this chart template. Here we're looking at the US yen, and here's a downtrend example. So we have a fractal here, and then we have 1, 2, 3, 4, 5 candles, and the indicator basically highlights this area in a color like this. So it starts putting your attention on, okay, this is the 5 candle zone. It didn't touch the red line, the red alligator line. And it also then shows you here by this dotted line and the arrow, this red line here, that essentially this would be your sell point. In this case, and that's what I talked about earlier, see in this case price pushed below it, but didn't break it yet. So that's where you've got to decide for yourself, okay, do I use pending orders, or am I a bit more cautious? And if you would have used a more cautious option, this would not have been a valid entry yet. Now here you had the break, now you're a bit low, but you could have waited for a pullback. So you could have maybe seen, okay, once price pushed up in this candle back towards that level, you might have been able to enter around here, and then gone on to this trade. So this is why this indicator is extremely useful, I think, because it just wraps up all the steps that I talked about here and highlights it for you. And it's not like an indicator where you just go, it's not like sort of making you a dumb trader in a way. It just takes out the fiddly work, and saves you time. You still then have to gauge, of course, what's happening. And like, so if we would have been interested in this trade, again, like one of our steps would have been to map out potential support and resistance areas. So if I zoom out a bit, So obviously we have a support level here. But aside from that, I'll go to the 4-hour chart. Oh, the indicator also actually shows you alerts. So the alert box comes up and it highlights what currency pair a possible signal has appeared. So it's very easy for you then go to the chart, check it out, and make your analysis. But it's just really a good shortcut. So just to go back here quickly, so I've drew one level here. And there's another level here because we had this previous bottom. And that's it. So I'm going back to the time frame I looked at, the 1-hour chart. So in this case, we say, okay, we've got a quite important level here. So I would have probably waited for a proper break. So this was the break, then waiting for a pullback to the level, and then entered. And because you would have noted, you would have highlighted this level as well, this would have actually been already a profit-taking level. And sure enough, we had quite a strong reaction to it. It still probably wouldn't have stopped you out because your stop loss probably would have been, again, here beyond the last fractal maybe. And so you would have absorbed this swing before it went down. And obviously now it's trying to test that bottom again. I think this time it will break just because of previous analysis that I've done. So in a way, it's an interesting point right here. Because this could actually be a setup that could work quite well. Why? Because the US yen has been unable to break below this level for quite a lot of days. It's now back down here. I followed this pattern quite a bit. This has probably been a triangle pattern actually all the way from here. That is now broken. So a downward potential is definitely quite strongly on the cards. And if we get a break, so okay, in this case, in a way, for the strategy itself, it may have been invalidated because actually price hit this red line. So there was quite a strong upwards move. But say, okay, if that wouldn't have happened and this now starts to break, then a pullback towards that line might be a really good sell signal because you've got a lot of room to the downside because there's actually nothing nearby at all. You see? Nothing here at all. So I have to actually zoom out really far to come anywhere close back to 2016. And even then, right, we are at this lower third white line right now. There isn't an obvious support nearby. So the closest you would get is probably, well, there's one more thing. There's 105 in the way, which is a level that's just slightly below that. And whenever you get to a round number, like 105, or 104 or 110, they are always psychologically important levels where traders place orders. So they have to be borne in mind. So I would imagine that price will break down and there will be most likely traders, new buyers at 105. I believe it probably will still break further down. But this is going to be a level where it's going to bounce. So it might be a good time, for example, to take profit here. What might happen is you get this break. It might already go down to 105, come back up to this level, and then break down further. So just to give you, a real life example. So I think we're starting to go a bit over time. Sorry about that. So I hope I've covered as much as I could. you can get this indicator. I think my colleague will be in the chat room. I think he'll be sending you a link if you want it. And I think the indicator is pretty cheap. It's, I think, less than $10 if I'm not mistaken. So I think it's a really nice one, and I hope you've found this useful. I'm going to show you the notes again. Shall I leave this on the screen for the moment so that you can write things down? If I get some feedback again, maybe, are there any more other questions? You said ignore the next fractal. I'm not quite sure what you're referring to. I'm a bit confused. Can you maybe describe a bit more what you meant? I think what I said was ignore the you go by this so in this situation, you'd go by this this is your key fractal. You're waiting for your thingies. You don't start to base it again on, well, I guess you can. If say you're looking at this signal, and then within those 5 candles it may get invalidated, then yes, then you, like by hitting the red line or going too sharp up or something like that, then yes, then you can start counting again from the next fractal and say, how is it working from this fractal? Do all the rules get fulfilled? I hope that clarifies your question. Yeah, basically what I mean by ignoring the fractals that comes afterward is for the setup, for the rules for the setup. Don't worry about them. So you don't start. Don't restart your count at the next fractal, but just stick with the one that you started with. In terms of, don't ignore them completely. Like if we go back to the pound USD chart for our, here, like I said, it gives you in a way good information here that the price is really nice and choppy, so you can do that. Okay, another question comes in. So we can use the strategy with the current lateral forex market. Yes, and well, it's really a trend-based strategy. So in a way, it's not good for when price is really range bound. And because really we're wanting a trend, but you see that all then depends on the scale that you're looking at. Because, for example, in this pound dollar pair, right? Well, from when I zoom into, when I've got this 4-hour time frame here, let me just get rid of the indicator so that the chart is a bit cleaner again. So, well, this looks like a trend, right? However, if you zoom out, it starts looking like a range, especially maybe when you go to the daily chart. It's pretty rangy so far since then. But then if you go into smaller time frames, so if you go to a 1 hour time frame, well, then you're really saying, okay, yeah, here we've got a trend and it's looking quite nice. So this is where you've got to basically bear the bigger context in mind. And that's why it's really helpful to draw out your levels on the bigger time frames, on the daily chart, on the 4 hour chart. And then you can, in a way, trade within a range on a smaller time frame. This is quite because this is a large pattern on the pound dollar. There seems to be enough scope for that. Say, for example, in the case of the US yen, it's been a bit more erratic, right? So on the 4 hour time frame, this doesn't look as nice and clean as the pound dollar did. So if you wanted to trade within this area, you would need to trade on a much smaller time frame. I think you'd want to trade probably on a 15-minute time frame. But it's in a way, it's you want to choose the best things. It's not like, it's not so much that you want to trade all the time and try. Sometimes it's just good not to trade for a bit, even if you don't trade for a few days or there's no good setup until something good ripens. But if you wanted to trade within this, then again, I would start with mapping out your levels of that range. So I've done some levels here. Plus, if I go to the 1 hour chart, let me get rid of the template again. Oops, now I've lost my lines. So you've got some levels that you've mapped out, and then you can add some trend lines as well. You can, for example, wrong tool. You can start adding those into the range. Just trying to capture as many bounces. So once you've done that on the higher time frame, then zoom into a low time frame and see how this area here is a confluence or convergence of support horizontal levels and trend lines. So you might have been able to say, okay, this is an interesting area to trade, and on a 15-minute time frame, you might have been able to pick up something in here. So I hope that's answering your question. Okay, so some more questions have come in. When I count 5 candles at the formation of inverse fractal, last candle must touch line green. But is it correct also if candle touch the red line? Okay, so when I count 5 candles at the formation of inverse fractal, last candle must touch the green line. Let me just get back to the indicator quickly. So basically you're saying that you're counting 5 candles oh, I see. So you mean by the green line, you mean the moving the alligator lips, the green moving average. It doesn't have to touch it necessarily. It probably will, ideally, because because the moving averages obviously will catch up in this consolidation zone. It's not an essential though, but it can act as a bit of a bouncing spot. And I think even if price touches it very gently, the red line, that's still okay. As long as it shows quite a nice reaction to it, like here, for example. That's what I mean by reaction. Price touches it and then pushes off it quite strongly, so it's rejecting of it. That's quite useful, I think, as a gauge, rather than if a candle would close nearby. Like obviously this was a bit of a dangerous sign here that it closed break. That was definitely not so great, but I hope that helps a bit. Okay, other final questions. What's the average holding period in your experience using the strategy? Again, that depends on what time frame you're trading. If you want to trade this, say if you're using a 4-hour chart for your general analysis and then entering at 15-minute charts, then I would imagine you might be able to close that before the end of the day. So it would be probably within a day that they resolve, most likely. Then technical question, do EMAs 10, 50, 200 have a default offset number? I'm not sure what you mean by offset number. So basically, obviously you have a, oh, I see, like a shift. I don't think so. Obviously, to be honest, I'm not sure about that question. I would just, the way I use in moving averages is simply you choose the period you want. You leave this as 0. Generally, it's good to have it just at the close of the candles, and select obviously if you want it simple or exponential, and then you apply it. And I think that's probably the easiest way. Yes, we will get a replay. And do I expect further downward move from US yen? I believe there is probably a good chance. The reason, it's a tricky one. It's a good question whether it will break below 105 or not. In a way, I have a feeling that it will, and the reason why is because it's formed a pretty large triangle. And I know that I can tell you that it's going to be imminently reversing up, but we had a break of this triangle, and that suggests that we have now the final leg to the downside to come. So we have basically had this low, and then we had an A, B, C, D, E, and a classic ending of the triangle breakdown. And generally, the sort of rule of thumb is that the break after a triangle tends to be as big as more or less the opening of the triangle. So that's 230 pips. And if you then take 230 pips from the starting point of that move, that gets you to about 104.30. So that would suggest a break. Yeah. Other things that suggest a break is also the size of this move in relation to this move. There are some Fibonacci relations to that. So generally, this move the break of this should generally reach the minus 27.2 target of the previous move that led into the triangle. And that target lies also around that level, 104.50, 104.45. In addition to that, there's also a long-term trend channel and that is a bit lower as well. I'll show you that in a second. Oops. So just ignore those colored stripes, but you see the channel that I've drawn takes all of these tops, and the parallel line to it is here. And so there's another sign that suggests that a bullish bounce could happen once it comes close to this channel line, and that again is more likely to be around the lower 104, the lower half of 104. But then I really expect, just based on the structure that happens beforehand, a significant push that could well go back to 118. So that's something definitely I'm holding out for myself. I'm really interested of trading this to the upside once this final move has worked itself out. So okay, I think that's probably all for now. Hope that you've enjoyed it. The video will be made available, and that's me, I think, signing out. I hope that you've enjoyed it, and like you said, we're here to help. You can ask us questions. All the best. Thanks.